Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. Nothing much has changed from last week. Stock markets continue to remain in an extended consolidation phase, driven largely by FII sellings, weak earning reports, especially from the consumption sector, global uncertainties, including the upcoming US elections, and mainly due to margin calls winding up, resulting in selling Nifty stocks spirally going down on mid caps and small caps. The Nifty ended 2.7% down, while the Bank Nifty was down by 2.5%. Meanwhile, mid-cap and small-cap indices underperformed the broader market, each dropping around 6%. Most of the results announced until 26th of October were either poor or flat due to weaker demand or higher input cost. Few of them even lowering the guidance. Among the sectors reporting good quarterly numbers are capital market services related stocks like CDSL, IIFL Securities, Nippon Asset Management, Nuama, 361 Wealth. Also, sectors related to energy like wind energy and solar energy are showing good traction. Few good results include Inox Wind and KPI Green, and some railway based stocks like Texmaco and Titagarh. If we take a little longer term view, fundamentally and structurally, India is in a great shape with strong corporate balance sheets, lowest debt to equity ratio, a healthy banking system, and financially stable, affluent, middle class household flowing into the market. Nifty 50 is trading at 12-month forward P of 21.5x, just 5% above its last 10-year average. The valuation is indicative of optimism regarding the long term growth. Nifty earnings growth will likely remain steady at 12% CAGR over FY24 to FY26. We expect sectors linked to domestic structural demand and some exports theme to do really well. We are positive in sectors such as capital markets, energy, recycling, defense, railways, and infrastructures. However, cyclically, we are going through a downturn due to subdued execution or input price inflation, creating excellent opportunities to invest in high quality companies at sensible valuation. This challenging period presents an opportunity for bottom up, value oriented investors. Several growth oriented companies are now trading at attractive valuation, making this an opportunity for investors to selectively buy stocks with longer term potentials. On the global front, geopolitical developments, particularly the Iran Israel situation, will be closely monitored for the potential impact on crude oil prices. Markets worldwide may adopt a cautious, wait and watch stance ahead of the US presidential election. Technically, we believe that the current market texture is weak, but overall, the strong possibility of pullback rally from the current levels is quite possible. For the traders, immediate support is at 23,900, while 24,600 remains an immediate resistance zone, with 25,000 as a significant hurdle on the upside. Coming from the news from Indian economy, growth in India's business activity slightly improved in October, driven by stronger manufacturing demand. HSBC's flash PMI rose to 58.6 from 58.3, indicating continued expansion with boosted sales, production, and export orders. New orders and new export orders expanded at faster rates, providing a good momentum for industrial production for the remaining months of 2024. Too early to say, but the manufacturing sector should show good pickup going ahead after a brief slowdown. In summary, while the current environment suggests caution, we view the downturn as an opportunity for selective investments. With the benchmarks like Nifty testing crucial support levels, the potential for a rebound remains very well. Stay tuned for a Diwali Mahurat pickup this week. That's all for today. Wishing you a happy Diwali and a profitable trading week ahead. Thank you.